Today, we are going to talk about two things. One, triple tops and triple bottoms. Two, entries for price patterns. Of course, as you know, we have different types of price patterns, and I've already talked about some of those, most of them in the previous videos. You can go back and watch those videos to get familiar with those price patterns. One of those price patterns that we have triple top and triple bottoms, and these are mostly used as trend reversal patterns, mainly maybe when we're in an uptrend, and yeah, we need to see, like, we need to confirm that the trend is changing to a downtrend. We can experience a triple top or a triple bottom, so sorry, a triple top, and we know that we are going into a downtrend. Likewise, that if we're in a downtrend and the market is changing the direction to an uptrend, we need to see a triple bottom formed. Yes, it's not necessary that we can see those. We can see a triple top or a triple bottom. Other price patterns are there, like double bottoms, inverse head and shoulders. There are very many, and I've already talked about most of them in the previous videos. You can go back and yeah, watch them. For today, let's talk about just these ones, how they are formed, how we can trade them, and how best we can just get money from these price patterns. Yeah, so uh, triple top, let's start with a triple top. We can say triple top, we're in a downtrend, forming higher highs and higher lows, higher high and higher lows. Then we come and form a higher high. Then we come to form a lower low. Then when we come and make a failed what? A failed, yes, a failed high. A failed high is where this high and these ones, they are the same what? At the same level. Or this one failed to exceed this level. We confirm that now we start seeing, like some people can start seeing here signals of a double bottom. Then we wait for the market to come and test this one, neckline. The neckline, of course, as the previous price patterns, this one also has three, yeah, okay, we can say two parts. It has triple top, one top, next top, and the last top. Then it has a neckline. Of course, we need to see this market come and retest here. It should not close below this now. That is one of the conditions. We should not see the market closing below this. Then we need to see the market retracing or a pullback, because we need to see a pullback, and this market should not close above this. Now we confirm, now we already have two triple bottoms, tops, sorry, two triple tops, two triple tops. Now what do I need to wait for? We need to wait for this market now to come and close below this, and you get an entry. Some people can wait for what? Some people can wait for a pullback to retest this neckline and the market continues down. But some people like trading a breakout on this one. So long as you have confirmed that we already have these triple tops, you can do what? You can enter into the market. In front there, we are going to see the entries, the conditions for entries. And in those conditions, that's where we shall see when to enter and when to move out. So that this is a triple top. Then let's look at a triple bottom. A triple bottom. Yes, a triple bottom is here. As you can see, the same principles that happen here also happen here. We have triple bottoms and triple neckline. So a neckline. So here the market must be from an uptrend, from a downtrend, and changing to an uptrend. It can be, by the way, here, the longer it takes to form these patterns, that like the stronger it will be. Good. Like we have been in a downtrend for so long, and we see this one being formed for almost maybe 3 months. It can take 3 months to be formed. Yes, like when you go to high time frame, like 1 day or 1 week, you see this. Now you confirm that we are changing the trend, or we can look it at in what we call a minor or a near trend. You understand? Or a short-term trend. Yeah, and that's when for those day traders, you get your entries and you confirm that you're going to take a good trade. Yes, so let's continue. Now we can see forming lower low, also forming a lower low. After forming this lower low, we need to see the market forming a lower high. You get? For those ones who like getting sell orders, here you can place your sell orders targeting this. Of course, when we reach here, we need to see this market respecting this level, now forming another bottom. You get? Now we are forming this bottom. We don't need to see the market closing below this. No, it should respect this. We shall see. We shall go to live charts and we see all that. So we need to see the market coming back and respecting this neckline. It should not close above this. It should not close above that. Of course, if it doesn't close above that, we need to wait for this market to come back here. And if it doesn't close below this, now it means the market is going up. When it goes up, some people can immediately test a breakout after a candle closing above this. Now it means we have broken this neckline and we are going up. Some people can trade that breakout, but some people can wait for a retest and trade. It depends on what you want. Here, it's okay, you can trade a breakout. It's okay, you can trade after this pullback or a retest. You understand? Yeah, by the way, for closing and whatever, I think you're hearing me talking about the market should not close above this. Okay, when we control here, when we make here our neckline, there's what we call a termination zone. This one will apply to both this and the other one. A termination zone. What do I mean by a termination zone? Termination zone here, we need to see the candle that made a termination zone. If we have this candle here that made a termination zone at this point, yes, we need this. We have that candle that made a termination zone. Yeah. Let me put wicks on this. Let me put another wick. Yes, some people, like, you can have your rules that you follow. You get? Just for simplicity, you can have your rules that you should follow and do what? And trade. You get? Sorry for that. Yes. If this is the candle that has formed this first lower high, now you need to draw your resistance here, or what we call a termination zone on the neckline. You understand? Some people can use just lines. Some people can use try to use these ones. If you want to put a resistance, these are the rules that you should follow. Then you need to see this candle. You need your resistance. Yes, resistance should start from this body of this last candle that has formed to the top wick. Then we need to see these ones respecting this level. When I say I don't want to see a candle closing above this here at this point, we don't want to see a candle being formed like this. We don't need its body being formed outside of this zone. If it is here and the wick is out, that one has no problem. If it's like that and we have the wick out like this, however long the wick is, that one has no problem. You understand? That one also applies to here, even here down. We don't want to see the market closing below here. That means we don't want to see any body of the candle closing below this. And it's better when you draw these resistances. You get? Somewhere you can find drawing a resistance can hinder you from getting some chances. So here you need to be very good, or you need to be very dynamic when you're doing this. Let me hope that one is okay. Now, that was the first part of our topic for today. Yes, triple tops and triple bottoms. Then let's go to look for entries for price patterns. These are one of the price patterns that we have looked at. Yes, when you're looking for entries, yes, let me put it here. Entries. When we're looking for entries, what do we need to look at? You need to have your conditions. Of course, after seeing that price patterns, what do you consider? Some people can consider a breakout. You get? Some people can consider what? One. Some people can consider no. Some people can consider what? Some people can consider a break, one, a breakout, then two, people can consider candlestick patterns to get an entry. Yes, very okay. Here, if you have those conditions as your entries, that one has no problem. So let's go live in two charts. Actually, we shall first start with this triple tops. Yes, though triple tops and triple bottoms are not easily formed in the market, it can take a while to see them, but when it is formed, just know it's a valid one and a good one. You understand? So here it was formed. Here, this is Solana live now. If you can see, it is Solana, and a triple top was formed, and there was a very good trade on this, though we are still moving down. To my analysis, we are still moving down. So but here, when you're getting your entries, there's what we call having a target. What is your target? You get, you should also be having what we call targets. Yeah, as we can see, the market came, it was an uptrend. We are seeing the market forming this what? This top. Yes. Then we are seeing the market coming on the neckline. We are seeing the market going up again, forming another top. We are seeing the market coming to test the neckline at this point. You get? Then we are seeing the market going back to form another top. Then the market rallying up to here. You get? So what I was telling you is this. Here we draw our neckline now. We have seen our neckline is here. Yes, that is our neckline. Then we are seeing now our termination zone being this. This is the candle that formed the first top. Yes. I think what I was telling you, we don't want to see any candle closing above this. We are not seeing any body of the candle closing above that point. Let me zoom. Yes. We are not seeing any candle closing above this. Then after that, some people, then now when we got entries, I told you some people can trade candlestick patterns. Candlestick patterns. What do I mean? We need to see a candle, at least a bullish engulfing candlestick. We can see shooting star, but here someone would have considered this one as a candlestick pattern for an entry. This is what? As you can see, this is a what? This is a bullish engulfing candle, and you enter from here expecting to move out of the market from here. You can measure your percent. This is for sales, for those who want to take sell orders after this. Then I enter from here. You can take your 4%. Yes, this is for those who want to place sell orders in futures. You understand? Yeah, then even no forex guys don't do Solana, but for futures, yes, you can take this one. Those who do crypto, then yeah, that was entry number one here. Then another person would be this, after seeing the market closing below this, of which this is the same. Yes, after seeing the market closing below this, the neckline. After seeing the market closing below the neckline like this, we are seeing this candle closing below the neckline. You enter, your target is here. You get, your target is here. By the way, I'm going to give you a sample on this one. I placed this trade immediately after this, around here. Yes, around here, and I moved out with almost 6%. You understand? Yes, that is an entry. So when you're entering, what do you like? Which conditions do you consider to take a target? A target is this. Remember, we measure the percentage from here, from this one, the candles that made the first top to the neckline. You get, that is 3%. So you should also measure from your entry. Measure 3% from that. This is our entry now. 3% from that, and the 3% is here. As you can see, the market hit that, regardless of maybe the leverage you had used. You understand? Yes. So price action is the best. Price action is the best. By the way, price action applies for both crypto, futures trading, and forex trading. You understand? So the technical analysis is the same, though that the nature of trading and whatever they differ. Yes, this is how we get entries. Entries, you consider price patterns, candlestick patterns, and yeah, you as a person should be having the target. How do you get the target? Target, you can be expecting the next levels. Of course, key levels, that is the supports and resistances. You target those and they give you your what? Your exits or your targets, like what you should take out of the market. But as I see, this market is most likely, remember for me, I take long trades. Those trades are going to, this one is most likely to come up to this point. You just leave this one going up. It is most likely to come up to here. You understand? Yes, that was for that. Then let's go to BTC. If we can check on BTC, and get here, as you can see, BTC is forming a very good sell, with what we can call double top or head and shoulder. Let me explain. For head and shoulder, of course, short term, of course, you need to first understand which trend are we in. Generally, from I've already seen this, generally I understand that we're in a downtrend. As you can see, first understand, if you're in a downtrend, why do you press buy orders? You press sell orders. Yes, we formed the lower low, and this is a lower low. You get? And we are seeing the market now going up. Now here we can call this one a short-term uptrend. And we expect the market to move down, of course. Yes. And in that short-term uptrend, and another thing is that we see here the market rallied, like it moved at a very terrible speed. And the market must come and cover this space back. You get? Yes, this retracement must be there for the market to fill this gap here at this point. If you can if you have been doing good technical analysis and if you have been following that. So here I will first tell you one thing. Let's first see. This is my double head and shoulder. Head and shoulder. We are seeing the market forming a head here, a left shoulder. Then we are seeing the market forming an head at this point. Then we are seeing the market coming to test this shoulder. Then we are seeing the market going back into our termination zone, and we are not seeing any candle closing above here. Then we are seeing now the market coming back, and we have seen the market is moving down here. Those who want to place sell orders, it's high time you place your sell orders. What is our next target? Our next target is we measure what is the distance moved. Of course, 3%. Yeah. Then you come and measure it down here. Why will be your 3%? Of course, but if someone doesn't care, for so good time, you can take your negative 5% depending on which leverage you have used. For those of FX, depending on which lot size and whatever. Yes, then you can get a good entry here. Like for me, this trade, I've pressed this trade immediately at this point. After seeing this candle forming a bullish engulfing candlestick here, I entered. You leave this one going up. As time goes on, we are expecting this market to come down here. You get? We are expecting this market to come down here. Or another thing is, if you see my trend line here, I drew this trend line as it is acting as my what? As my resistance. And I'm seeing this market breaking below this and remaining down here. Very many confirmations giving me that we are most likely to have the price move down. Yes, remember to subscribe, share the video, and let's keep commenting where you have not understood, then so that in the next video I can clarify on that or give you a reply on that. Remember, I don't do account management, and this one is just for study purposes. It's not financial advice. You get? It is made financial advice, but it's not a must that you should apply that. You understand? See you. God bless.